about GSTR-3B. As per section 39, it is to be filed electronically. It cannot be filed manually. Also, as per the law, there can be a difference in date of payment of tax as well as filing of GSTR-3B, or the mandate of payment of tax along with GSTR-3B is not per se as per the tax, but GST portal only allows us to file GSTR-3B in its completeness once we make the payment of the tax liability. Of course, we are going to discuss the circular 26/26/2017, wherein it is mentioned about the making correct rectification, amendment of the omissions or incorrect particulars which we have furnished in GSTR-3B returns, and subsequently how do we rectify all of that before 30th of November, provided the return in October 2023 from the point of view of financial year 22-23 that has been filed before 30th of November 2023. And now we are going to discuss the changes in the manner of filing and the changes in the form. So let me tell you that these particular changes in the format of GSTR-3B, they have been introduced by notification 14/2022 dated 5th of July, which has been further elucidated by the introduction of the circular 170/02/2022 dated 6th of July. So these are quite important. In fact, the circular is quite important because there is a practical example also along with that. I would invite everyone to go through the circular after the presentation for better understanding. This slide, we see a comparative statement of the old manner of filing of GSTR-3B, the GSTR-3B format, and on the left hand side we see that is the old format which was valid up to July 2022. From August 2022 and onwards, we have the format of GSTR-3B, which is applicable ever since, and it is on the right hand side. You can see the blue text, that is the new introductory text which has been brought about by the amendment, and the old the text in red which we see, they are the deleted texts. We are going to, rather than diving into the theory of all of this, let us take an example, practical example, so that we can be more intuitive and we can understand these changes, and then we can obviously relate the theory part also. So now in this particular example, which you see, the first 4 entries, they are pertaining to invoices, and the last entry of DEF Limited, that is also an invoice. In between there are 2 reversal entries. They are not pertaining to a particular invoice, but they have been put as a part of the example, so as to understand the entire nature of the change in the manner of filing in GSTR-3B. As we see, the first invoice, supplier Mr. A, he issues a particular invoice that is dated in July. It is available in GSTR-2B of July. We have entered it in our books in July and it is eligible. Okay. The second particular entry you see, it is from the supplier XYZ Limited, wherein goods are in transit. Now, section 16 subsection 2, clause B. This is one of the conditions to claim input tax credit, is that the goods or services need to be received by the recipient in the same month if you are to claim that particular input. Now for the month of July, you were to see that the goods have not been received. For instance, this particular invoice which is issued by XYZ Limited is dated 30th of July or 31st of July. Goods are actually received on 2nd or 3rd of August. So if the goods are received on 2nd or 3rd of August, what are we going to do in our books of accounts? We are going to create an unclaimed input tax credit ledger. Even though we may be able to put in the purchase, but the credit we cannot claim, right? Now here, what are we going to do? We are going to see that this particular input cannot be claimed in the month of July GSTR-3B. Now we are going to see how do we make what is the treatment of this. The next entry is the invoice received from the supplier Construction Limited. Now obviously we already know that if any invoice has been issued in respect of any construction, renovation, refurbishing, anything which is in the nature of capital expenditure and capitalized in the books of accounts, so that is a block rate under section 17 subsection 5. So this particular amount of 25,000 is ineligible. We are going to see how are we going to put it in the new format of GSTR-3B. Then the fourth invoice, this does not even appear in GSTR-2B. For instance, this particular supplier is a bit lazy. He's PQR Limited. He files his July GSTR-1 after 11th of August cutoff due date. He files it on the 15th or 16th of August. So this particular invoice, which it will not appear in GSTR-2B for the month of July for the recipient. This will naturally appear in the next particular month, right? So for the month of July, we cannot have this particular invoice claimed in GSTR-3B. Moving ahead, we have ITC reversal under Rule 42-43 exempt supply. Section 17 subsection 2 read with Rule 42, we know that if a particular taxpayer is is having exempt supplies 100%. So first we have to claim that input in table 4A5, which will be auto-populated from GSTR-2B. Then we are going to reverse it in the nature of permanent reversal in table 4B1. We are going to see that. But if a supplier has both a mix of taxable supply, outward supply, as well as exempt supply also, so these rules come into the fore. As per Rule 42, input and input services, we need to calculate the proportionate input tax credit, which can be determined to be ineligible to the extent of the ratio of exempt supply to the total outward supply and of the common input, and then we are going to consider that as an absolute reversal without any scope of reclaiming in the future. So that is a permanent reversal. Now, moving ahead, the second last entry is ITC reversal. We would be aware of Rule 37, read with second proviso to Section 16 subsection 2, which mentions that if a recipient is unable to pay to a supplier the value of supply along with the tax thereon within 180 days from the date of invoice, what does he have to do on the 181st day? Or the GSTR-3B right after that, he has to make a particular reversal along with applicable interest from the date of claiming of such input tax credit, and it is in the nature of a temporary reversal, which in case in the future, if he pays to the supplier that particular value of supply, he can claim that in his GSTR-3B. And this particular entry is not time barred by Section 16 subsection 4. The last entry we see, it is from the supplier DEF Limited. Here invoice is ineligible in nature. Here GSTR-2B in itself categorizes it as ineligible. We don't need to categorize it only, because GSTR-2B it will show ITC available, no. Reason being, there are two instances wherein GSTR-2B categorizes an input tax rate as ineligible. First is that if that particular invoice has been time barred by Section 16 subsection 2. For example, if we have an invoice of April or May 2022, we report it so late in October 2023, but we file that particular GSTR-1, that supplier, after 30th of November. Or if a particular 2021-22 invoice is uploaded today, so that GSTR-2B will naturally take it as time barred. That is first instance. Second is in case if I were to take a particular service from a different state in terms of immovable property. For instance, I go to Karnataka, I book a particular this conference hall to deliver a speech. There the services is provided in relation of an immovable property. Immovable property, the place of supply will be the location of the immovable property. So the place of supply is Karnataka. Location of the service provider, the hotel, is registered in Karnataka. I have taken registration in West Bengal. So it is an intrastate supply, but I don't have a registration in Karnataka. So that naturally is taken out in GSTR-2B and termed it as ineligible, right? So these two, sir, they do not auto-populate in table 4A. This is auto-populated in just a reporting table, that is table 4D2, which we are going to see. Now, considering all of this, the new rule, as per if you see on the right hand side, this is after amendment. On the left hand side, you see before amendment. After amendment, sir, what do we do? After amendment, it is same mantra, simple mantra. Whatever amount of input tax credit is coming in the month of July in your GSTR-2B, eligible, ineligible, except from the last point which I mentioned, wherever ITC available is mentioned, yes, in that last column, it will be auto-populated in table 4A. Table 4A1, table 4A3, table 4A4, table 4A5 from August 2022 and onwards. Right? Now, this particular amount, it has a portion of ineligible ITC also, but we know that. It is a block credit, it may be ITC reversal, it may be something. So, let us calculate the amount. First entry was 50,000, which was eligible. Second is ineligible, but only for the month of July, because it is goods in transit. So, 50 plus 20, 70. Third is, sir, clear-cut case of absolute whatever block credit without any scope of reclaiming in the future, that is 25,000. So 50, 60, 70, 95,000. 95,000 entirely will be auto-populated from GSTR-2B to our table 4A. Here, sir, I have not given the breakup 4A1, 4A2 because it would be very big, but what we understand is 4A5 and 99% of our credit is auto-populated. Right? Now, what about, sir, the reversals? Why are we to make so many disclosures in so much of detail? I'll explain the reason, but let's come to the reversal. Now we know that there is an element of ineligible credit, block credit, or goods in transit in our table 4A. So we cannot just leave it like that, because 4C has to contain only the element of your eligible credit, because 4C will directly impact your electronic credit ledger. So table 4B is divided into two parts, table 4B1, table 4B2. Table 4B1, the concept is a permanent reversal. What is permanent reversal? Sir, some by mistake, non-business, whatever input has come, I don't recognize it, of someone else's GSTN. It is block credit. it is input which I have to reverse due to proportionate exempt supply, or it is of such a nature wherein there is no scope, it is absolute, there is no scope of reclaiming, right? So here in this example, I see construction block credit is 25,000, right? And we see that ITC reversal due to exempt supply proportion 7,500. So 25,000 plus 7,500, so 32,500. There is no scope of claiming such input tax credit in our later GSTR-3B returns. I have disclosed it in table 4B1 as reversal because this forms a part of table 4A5. Because it is auto-populated, and I have been asked not to touch this particular table apart from an exception which we will see in the next slide, which is August GSTR-3B, right? Now, what is temporary reversal? So right below table 4B2, we have to reverse again. Why? Because temporary reversal portion also forms a part of auto-populated ITC in table 4A5. So we cannot just leave it like that. We need to reverse, but we need to categorize it as temporary reversal. Oh, what is temporary reversal? Sir, 3-4 cases. Circular 170 mentions only 3 cases, sir. First case is circular section 16 subsection 2 clause B, violation of that. That is माल नहीं आया अपने पास वो महीने में. Second case, they mention section 16 subsection 2 clause C, that the supplier has not made the payment to the particular government. But how do we find that? GSTR-3B is a static statement on the 14th it gets generated. But sir, do we have a table there to see the status of GSTR-3B of the supplier? No. It is in column number 18 of GSTR-2A. But that again is dynamic statement. We are going to come to the challenges of this particular manner later. But in this particular case, what we see is temporary reversal is of the nature of what? Goods in transit. And sir, second is ITC reversal due to rule 37. सर 180 दिन में पेमेंट नहीं की है, लेकिन कभी तो पेमेंट करेंगे कि परमानेंट में डाल करके भूल जाइए, सो जाइए. नो, वी आर नॉट गोइंग टू रेस्ट्रिक्ट आवर चांसेस फॉर हैविंग द अपॉर्चुनिटी टू पे टू अ सप्लायर आफ्टर 180 days and then claim it and avail the benefit of not being time part under section 16 subsection 4 also. Right? So the total amount for temporary reversal would be, you say out here goods in transit 20,000 and ITC reversal for 180 days is 1,500, 21,500, sir. We are going to have temporary reversal. Sir, पहले केस में क्या करते थे? In permanent reversal. Earlier case, sir, if you were to see this, what is there in red on the left hand side? Table 4B1, earlier exempt supply still, input tax rate reversal we used to show there, because earlier what used to happen, sir? Earlier in table 45, you only used to claim the eligible input tax credit. Why would we put unnecessarily ineligible? Why would we put unnecessarily block credit there for subsequent reversal? No. So if you were to see in the example that in the earlier case, before amendment, 50,000 is only put because only 50,000 is straightforward eligible. So the left hand side is the earlier particular state. Second earlier state, you see permanent reversal, sir, as per the particular form, it is mentioned 4243 was already mentioned. So we mentioned 7,500 here, right? And the third one, temporary reversal 1,500. Sir, earlier भी पहले भी तो कभी तो reverse करना ही था. Obviously, since 1st July 2017 till now, till July 2022, we would not reverse if we were to violate your rule 37. We were to reverse, but we were to reverse it in others. If you were to see table 4B2 for the left side, it is others. So we would temporarily reverse there earlier. So it would be 1,500 there. But sir, kindly see, net ITC as per 4C is always same. Reason being, sir, this is the quantum of eligible ITC. How can a manner of change of GSTR-3B give you an advantage of claiming an extra input tax credit just because the manner has changed? No, table 4C is directly going to affect and add to the existing balance in your electronic credit ledger, which you will use to set off your tax liability for the payment. So your net ITC will always stay the same. Now table 41, sir, let's see table 41 in the earlier manner of filing, 41 which is red, ineligible ITC, just disclosing. Earlier block credit we just had to disclose, no element to add in 4C, no element to subtract in 4C, just as a matter of disclosure. But now, sir, do we need to double disclose? No, we don't need to disclose because the block credit we have already disclosed in 4B1 permanent. Permanent is 32,500, that is 25,000 plus 7,500. We've already disclosed in 4B1. Why will we disclose in 4D1? Right? So 4D2, sir, 4D2, as I said, that puzzling time where 2 times the GSTR-2B statement, they themselves are so sure that it is ineligible. So it auto-populates here. You don't need to do anything. It auto-populates there. Where you are taking hotel services in a different state, where the POS and the registration of the supplier is in a different state, intra-state there, and your registration is in this state, or where your supplier is very lazy. He is going to file his GSTR1 much later or upload his invoices much after 30th of November for the succeeding year, right? Now, let's come to the GSTR-3B for the month of August. Sir, this was July. Let's come for August. Sir, August में क्या होता है? Assuming there are no specific invoices for the month of August for sake of simplicity, we see that there are two invoices which will affect our return for August. First invoice, sir, can anyone point out? The first invoice is your goods in transit, that XYZ Limited. Why so, sir? Because that has already been made available in your GSTR-2B of July, right? It will not come again and auto-populate in your GSTR-2B of August. Why will it? So you have to manually, with your fingers, you have to put this particular input in table 4A5. So what will come in table 4A5? Table 4A5, whatever is auto-populated in the month of July, August GSTR-2B. What is auto-populated in August GSTR-2B? One invoice which was missed. One invoice which was missed, which is PQR Limited. PQR Limited, the supplier was very lazy. It was dated in July, but he filed his GSTR-1 after 11th of August. If he's a monthly filer, or 13th of August after, if he's a QRMP taxpayer. So that particular invoice will be auto-populated in your August GSTR-2B. So whatever is being auto-populated in your August GSTR-2B, that will naturally come in your August 4A5 or 4A, whatever you say. If we have to add even 1 rupee there needs to be a substantiation with a counter reporting in table 4D1. If we don't do so, we may be at the risk of receiving notices. Reason being that, see, in table 4A, 4A5, there are two invoices which are coming. First is auto-populated, which is good, which is what? That the invoice has not been uploaded in your GSTR, the invoice has been uploaded, but the GSTR-1 has been filed date. So it is coming in the August GSTR-2B, right? So that 15,000 rupees will come here of PQR Limited, auto-populated. By hand, we are going to put 20,000 because we are reclaiming it, because we've reversed it in table 4B2. Under what circumstances? Goods in transit. That is section 16 subsection 2 clause B. What does the ITC reversal in section ITC reversal as per table 4B2 say? Table 4B2 says, आप जितना amount इसमें reverse करोगे, please ensure that at least that much of amount, if not more, you may be eligible at that point in time to think that you can reclaim it in the future when you satisfy certain conditions. What conditions? Section 16 subsection 2 clause B, माल आ गया actual में. Section 16 subsection 2 clause C, that is the supplier has actually made the payment of the tax to the government. And in the circular, this case is not covered, which is section 16 subsection 2 clause A, which is invoices are not there with us, but this is not covered by the supplier. To be in the circular, to be on the safe side, I would still consider, if I have not received any invoice dated July, उसका मेरे को soft copy, hard copy नहीं मिला, to be on the safe side, even if it appears in 2B, even if I whatever put entry of in the books and all, I am not going to claim that, and I am going to temporarily reverse that. Okay, so here we see that 15,000 is auto-populated of PQR Limited and 20,000 is by hand we put in here. Why? Because we have reversed it in the previous table 4B2. Because now it's section 16 subsection 2 clause B, that particular that condition is being satisfied. But sir, just imagine one of the most important points of whatever the session, if we do not report this 20,000 rupees which we put by hand in table 45 and table 41, then it will be a gross mistake. Reason being, if we don't put this 20,000 in 41, what will happen? The department will see, oh, acha, auto-populated from 2B, 15,000 rupees, and there is no disclosure in 41. It is not a case of reclaiming. It is a case of negligence. You have claimed extra input tax credit of 20,000. Where is the evidence? So it is very imperative to report the amount which you have reclaimed, which you have reversed temporarily in the previous months. Now the condition is being satisfied. Please report it in table 4D1. We've already discussed this particular slide. There are few checkpoints. Let us understand why are we doing so many disclosures? 1, 2, 3, 4, 5, table 4B2, table 4B1, table 4B2, table 4D2, all of that. Reason being is that the center wants as much information so that it enables them to allocate the funds to the particular states, to know which state where the end consumption destination of the transaction is happening, so that they can allocate those funds clearly. If you do everything net, if you just put your eligible input tax rate in table 4A5, the government will not get all the information. So that's why this new manner of filing of GSTR-3B has been introduced. We also need to, we keep getting questions, sir, bill of entry. It is not appearing, it is linked with IceGate, facilities available in both GSTR-2B and GSTR-2A. Table 10, I think, in GSTR-2 and 2B also. There, if your bill of entry due to bill of entry, you file bill of entry, you pay IGST, etc. You can claim your input tax credit based on the IGST paid while you file your bill of entry for import of goods, right? Now, as per this particular circular, it's very important. Serial number 1 of circular 123/42/2019. This circular says there's a certain cases where your amended section 36 sub rule 4, which restricts the claiming of input tax credit if it does not appear in GSTR-3B, read with section 16 subsection 2 clause AA, which has been introduced from 1st of January 2022. In these cases, they are above that. Means, for instance, in case of import, even if that particular entry does not appear in GSTR-3B or in 2A, you can still claim on the basis of your prescribed document, which is prescribed under Rule 36, Sub-Rule 1, Clause D. Here it is mentioned, bill of entry or any other prescribed document, challan, on which you have paid IGST, you can claim input tax credit. It is not mandated that the particular entry needs to be in your GSTR-3B to claim it, right? That is first thing. RCM. There are many cases where we see that the RCM, the GTA, they have not uploaded properly, or they have uploaded with yes or no, by RCM no. So in those cases, sir, still you can take the benefit of this particular circular and you can take the benefit of the particular invoice. If it is a unregistered supply, section, I think it was your section 31 subsection 1 clause F or something, where your self-made invoice is there. So there in that particular so in those particular cases, sir, these are the prescribed documents which are mentioned in your Rule 36 on the basis of which you can claim input tax credit. You don't need these to be mandatorily appearing in GSTR-3B, right? Coming to the next point, sir, from August 2022 onwards, we see this change in the manner of filing of GSTR-3B. But, sir, before August 2022 up to July 2022, the credit notes were being auto-populated in table 4B2. Right? After August 2022 to December 2022, we still observe that the credit notes are being auto-populated in table 4B2. Only when an advisory on 17th of February 2023 came that from the month of January 2023 onwards, the credit notes, amendments, debit notes, the effect of all of that started netting off in table 4A1, table 4A3, table 4A4, table 4A5. Right? So, those particular cases where the cases are from when we are doing our annual reconciliation for 22-23, those cases which are in August 2022 to December 2022, those particular cases, the credit notes have been auto-populated in table 4B2 and they have not been netted off. So we need to obviously have this point in our mind. Another thing we need to understand is, as I have already discussed, the last point on this slide is that in case if we do not report the reclaimed amount in table 4D1 in the month of claiming such input tax credit, it may lead to the department thinking that you have claimed input tax credit by manually putting it in by your hand in table 4A5, which exceeds the auto-populated amount of input tax credit from GSTR-3B. So kindly ensure that this particular mistake it does not happen. Also, try to understand that adjusted table 4A5 figures. What does that mean? Adjusted table 4A5 figures means 4A5, whatever you claimed means auto-populated from 2B plus reclaimed amount minus 4D1, whatever you reported. So whatever comes from 2B plus whatever you have claimed, which you have reversed earlier temporarily, minus whatever you have claimed and reported in 4D1. So what is left with? The auto-populated amount from GSTR-3B. That should equal to the auto-populated amount in GSTR-3B from the auto-drafted GSTR-3B statement. So this is also a part of ITC comparison statement from the portal which we download, the auto-generated statement. So this particular point we need to keep in mind. Also, in the same advisory in February 2023, negative figures in table 4. Table 4A started to be accepted, on the portal. For instance, if B2B GSTR in GSTR-3B table 4A5, you have B2B input tax credit for the month of August, say 100 rupees. But in the same GSTR-3B, you have credit note, which is debit note for us, which is purchase reversal of 250 rupees. That 250 will net off 100 and it will be minus 150. That has been allowed. Also, your negative reporting in table 4D2, that has also been allowed. Now, we need to understand that, see, it is imperative that we are doing monthly reconciliation between 2B and our books, right? We need to at least maintain 2 series of documents, 2 records. First thing is whatever invoices come in GSTR-3B, but due to certain conditions which are not being fulfilled under section 16 subsection 2, such as goods in transit, such as supplier not paying your tax, such as we are not receiving the copy of the invoice, So we cannot claim it in that month. So we need to have a record, right? That in the future we are going to claim it in table 45 and report in 41. If we don't have a record, then we may miss that particular input. So that's the first record. Second is, obviously we have been following this for the since the time GSTR-3B came, I think in 2020 August or September, that time, wherein whatever amount is there in the books we have put, but it does not come in GSTR-3B, so unclaimed input tax credit. So we need to maintain those series of documents. Also, there is one peculiar case wherein, for instance, if the credit note from the supplier, which is our debit note on purchase return, if that is not uploaded by the supplier or uploaded but GSTR1 is filed late after 11th of the month, in that particular case, sir, I have discussed with several officers, or in my personal opinion, to be on the safe side, on the basis of self-assessment as per your books, since you have received a copy of the credit note, you have made your debit note entry in your books, you have returned the goods, you may have whatever had the exchange transaction also. In my opinion, you should upload the IPTC reversal in table 4B2 so as to escape the interest. And because why do I have to reverse? Because that month, for example, the credit note by the supplier has not been uploaded in the month of July 2023. So 4A5 is obviously higher by the amount of credit note. I need to reverse it in table 4B2. I reverse it in 4B2 so that I have a scope to claim it back when the credit note comes in the next month in September, and table 4A5 automatically auto-populated, the credit note amount reduces the amount which is auto-populated. Then I add it back with my hand and I put it in table 41. This case is not covered in circular 170. This is a case wherein I feel that if we do so, we may save the interest cost. That because the credit note has been issued, debit note has been entered in the books, so we are liable on the basis of self-assessment to ITC reversal in the same month. These are few challenges which we feel we may encounter in filling up the GSTR-3B in the new manner, because it's not foolproof, as I mentioned. Tracking suppliers GSTR-3B status. Before that, I mentioned the circular 170 does not cover a scenario of temporary or permanent reversal in the case where the copy of the invoice has not been received by the recipient. So to be on the safe side, you reverse it in table 4B2 is what I feel. There is another case where tracking supplies GSTR-3B status. Now, the circular clearly mentions this particular case, section 16 subsection 2 clause C, where the supplier has not paid to the government the amount of tax collected by us or has not filed GSTR-3B. The circular mentions this case that you have to, if you know this, you have to, or if you don't know this also, you have to reverse the input tax credit, right? If you've claimed that. Now, in this particular case, GSTR-2B till now has not been equipped to show the supplier status, filing GSTR-3B status. GSTR-2B is a static document on the basis of which we are doing reconciliation and finding out the determinable eligible ITC in 4C and crediting in our electronic credit ledger. Sir, if we resort to GSTR-2A on the 16th of, for example, August to file our July month return, if the supplier has not filed his GSTR-3B return until then, if he files it on the 20th of August, so as on that day, it may show no. And I cannot take an abrupt action to reverse that particular input because of violation of section 16 subsection 2 clause C in table 4B2. So this is a in this situation, if we receive from the government some report of the supplier conduct that the previous month GSTR-3B of the supplier has not been filed. So if that status we come to know, or if there's some ratio of GSTR1 to GSTR-3B filed by the supplier, if we come to know that, if he's declared less in GSTR1, if he's paid more in GSTR-3B, because if you would remember from 1st of October 2022, section 38 of our CGST Act, that has been notified, but rules to govern that has not come out. So we don't know currently that those 4-5 conditions further to claim input tax credit, we don't know how to deal with that. In those, it comes, supplier's conduct comes. The supplier has claimed, declared 120 rupees of tax liability in GSTR1, but he's paid only 70 rupees. So that proportionate less payment, how does it affect my input tax reversal? Similarly, if he has claimed 100 rupees in his GSTR-3B, but he's only eligible 50 rupees in GSTR-2B. So we don't know that data yet, and to ask the supplier recipient to reverse that on the basis of this circular, which is mentioned, I think it would be unfair right away. That is where rule 37A comes in, which we will discuss later. Now, annual recomputation of exempt supply input tax credit, which is to be now what we do is on a monthly basis, we calculate the ITC proportionate to the exempt supply and we reverse it in table 4D1, which is absolute permanent reversal, right? But on the same side, if we do an annual recomputation of the total ITC, which is proportionate to the exempt supply, which means exempt value of exempt supply divided by total outward supply into common ITC of input and input services. If I compute that in the month of September, October, for the last month, October 2023, to make any rectification and all, just in case, if I saw that I have reversed excess, I have to reclaim. But sir, this has been reversed in permanent, table 41, table 4B1, this has been reversed. If I have reversed something in table 4B1 in excess, and later on I come to know on recomputation that this particular amount should have been reversed less and I need to reclaim it. So if I reclaim it, I have to put it in table 4A5 and put it in table 4D1. But then again, I don't have a consequent entry in table 4B2, which is a temporary reversal table. This would create again a mismatch. As I've mentioned, the auto-generated ITC comparison statement, I have a particular this format, the heading, I have pasted here. I think if it can be seen here. If you were to see, this is one of the tables wherein if there is any mismatch, the department issues DRC01A, the department issues scrutiny notices in ASMT 10. Or intimations perhaps, okay, in DRC01B, which 01C, which we will see later. What does this say? Due to the manner of changing of reporting of this in table 4, claiming and reversal, from August 2022, the first 4 months are labor, April, May, June, July. That is a different method of claiming input tax credit and reversal. So here you would see that in this particular portion, what the first column is the ITC claimed in GSTR-3B. The first 4 months, it mentions after reversal of input tax credit, but it is being compared with the auto-populated figure of ITC appearing in GSTR-2B. But this is after reversal minus table 4B1 and 4B2. So in this case, more often than not, we will have a negative figure, which is good for us. Negative figure means कि अपना कम amount रहेगा ITC claimed in GSTR-3B. GSTR-2B has ineligible portion also. The difference will be negative. So that is fine. The second, from August 2022 onwards till March 2023, we see that this particular GSTR-3B, this particular takes table 4A5 and does not take reversal in 4B1 or 4B2. It takes adjusted 4A5 figures. Means table 4A5, whatever is auto-populated plus whatever amount we've reclaimed minus whatever amount we've reclaimed. So whatever amount is auto-populated from 4B, that should equal to whatever amount it is being auto-populated from 2B. So that should be, difference should be ideally 0. So we need to also understand, the difference in evaluation in this regard.